Why on earth should a landlord buying a leasehold property spend the money on a residential property survey before they buy the property? That's the question I'm going to pose to Luke Masters, Director of the Survey Network, on this week's Investors Corner podcast. Luke's well experienced within the surveying field, having done a business generation role for a number of years, and also worked on behalf of foreign investors bringing money into the UK property market. So we're going to discuss the revelation that the FTSE 100 has hit its record level this week, how cheap the pound is in comparison to the dollar, and why that might also fire house prices and investment in London and further afield. Luke, welcome back, and thanks for joining us for another visit to the Investors Corner. I don't know if we need to give you some sort of gold watch now as a regular guest.
A returning member.
Thanks for joining us on the basis of talking about landlords, or to landlords, about investing in property on behalf of the Survey Network. So, for those who aren't aware, the Survey Network is a building and commercial property surveying business, surveying all types of property. As a landlord, when you're viewing a property and when you're going through the purchase of a property, what are the basics that you should be looking out for?
I think it's probably, and I think people probably don't think about this enough, there's a distinct difference between freehold and leasehold as far as how people approach a purchase. But fundamentally, you're either buying all of a property or part of a property which sits inside the fabric of a larger building.
Yeah.
I think freehold, obviously you want to think about what's the current condition, what repairs or maintenance might there be, what future repairs or maintenance might there be, and am I anticipating what those are? So if you've budgeted 10, 15,000 for repairs and maintenance or upgrade works because you want to push it up the EPC banding, then making sure it is actually that number and it's not, oh, you're going to have to replace the entire roof covering in the next 3 years, which is going to cost you 40 grand. Because all of a sudden it doesn't look as good a net yield when you take £40,000 out the rent, unless you're getting a serious amount of rent.
Yeah,
every
it'd have
month.
to be a big rent to cover that. Yeah.
It's but then leaseholds are one I think people sometimes overlook, in the sense that, and the surveyors talk about it all the time, you go and visit the property, as in, let's say it's a 1-bedroom flat, first floor in a 3-story building. The buyer's expecting you to just survey the flat. Everybody in the transaction is just going, oh, well, you've got buildings insurance for the building, so don't worry about that. Just worry about the flat. But you probably want to know what the general condition of the building that your flat sits within is.
Yeah.
Has it got any movement? Is there any subsidence? Is there going to be a massive bill coming for the roof that you haven't been told about? It's those things that I think the landlords should consider, is especially with leasehold properties. Typically, landlords rely on there being buildings insurance and don't conduct surveys. The problem is the buildings insurance and the service charge is there as a pot, but you probably want to know whether that contribution's about to skyrocket because it needs all the balconies replacing on the external of the building, or whatever it might be.
Yeah.
So I think too many people that buy leasehold investments focus too much on the unit they're buying and not enough on the building that it's sat within, and making sure that building is actually sound and in good condition.
Yeah, it's an interesting point, because the way a block is managed, quite often there's a healthy fund in place, which is building on an annual basis. But then in other times, there is no fund in place. And as you say, when something needs replacing, the landlord comes, I was going to say cap in hand, but it's a little bit more heavy-handed than that.
It's more letter in hand.
Demand in hand, for a percentage split across all of the leaseholders to make that work. And every so often it comes up in those kind of news-based programs about people who bought a council flat for 26 grand in 1996 suddenly being asked for 126 grand because the whole thing needs tearing apart to put it right again, because no maintenance has happened in 35 years, and they're kind of looking down the barrel of the camera lens complaining about it out of ignorance rather than any kind of malice. But someone should have seen something coming.
Yeah, definitely. I think there's when you're purchasing something, again, specifically leasehold, it's good to find out what either the freeholder or the managing agent has done in respect of building survey or condition report, or just external. Quite often they'll conduct surveys to forecast capital expenditure for the next 3, 5, 10 years. So they might have planned preventative maintenance plans that say, right, we need to allocate these budgets out over the next 10 years because these works are going to be required. If that's been conducted and it's in place, then you're probably in reasonable hands that the pot's going to be sufficient for anything apart from stuff which you just can't foresee, which nobody's got the crystal ball, so they're doing as best as they possibly can. But if there isn't any information about the condition of the building, if there isn't anybody monitoring it or allowing for potential works or expenditure or forecasting what those works or expenditure are going to be, I think that is a little bit concerning, because at some point there is going to be a big bill. And if there isn't a contingency there for it, then collectively everybody will be paying for it. And what that looks like as a number, who knows? But I suppose it's just like anything, isn't it? Trying to go into it with your eyes open rather than not being fully informed when you make the transaction.
Yeah, you've got to look into everything, haven't you, buying the investment property? We've known sort of properties in blocks before where you've got a management company. Now, there's plenty of good management companies out there, but there's plenty of bad ones as well. You know, they get given this money, they try and cut corners on the works that need to be done, or they don't do those works at all. Yeah. So when you're in a position and there might be the money there, but yeah, no work's been done for 5, 6, 7, 8 years, and now the work needs to be done, so that money's going to go straight into that. So as an investor, I would hope that, you know, the majority of property investors out there do get the correct survey done. It's something that I would look at first of all, and get the what. Whilst we're talking about surveys, what type of different surveys are there? Because most property investors would get, you know, the deluxe survey, whatever you call it, the more in depth one. There you go. There's a new title for your survey, deluxe survey.
25.
But obviously, there's the basic surveys that can be done as well. So, what are the differences in those?
I mean, if you're looking at buying, again, there needs to be a distinct difference between freehold and leasehold in what gets included with what you should be looking at, or what a consideration should be. Not in the sense that you're not looking at the same thing, because you are, but some of it sits outside of the fabric of what you're going to actually own, essentially. But level 1 used to be called a condition report, very light touch. Obviously, you've got valuation survey as well, conducted by the bank, but that's just to say, is it worth what we're going to lend against it? Yep. Does the rent roll cover it at whatever it is now, 140% of the rent, or whatever then their metric is this week? But you've got level 1 condition report. Level 2 used to be home buyers report, and then you've got level 3, which is your deluxe service.
Yeah, there you go.
As it's now bit rebranded.
The surveyor rolls up in a long wheelbase 7 series.
Yeah, it's So look, I mean, in reality, there's a lot of people that are trying to make it clearer for investors. So they're almost badging it up as a buy-to-let survey, which essentially is just saying, really and truthfully, you need the detail of a level 2 home buyers on the internal fabric of the property, and then a level 3 overview of the external structure of the property. So is there any movement? Is the damp-proof course around the building looking okay? Does the roof covering look like it hasn't been cleaned in 25 years? In which case, how effectively is the management company managing it? Are the lintels cracking above the windows externally? Essentially, is the block in a good condition or a poor condition? And therefore, at least you can go back to your solicitor or agent or whoever else, find out that further information. Is there a decent sinking fund? What works are planned over the next 12 months? What's been charged for in the service charge? What's been predicted to be spent? And you can actually then start to get a holistic view of what you're buying. But really and truthfully, most of the time with a flat leasehold property, your main risk factor is outside your demise. To be honest with you, that's where your risk is. Your risk isn't really inside your demise, because if there's a leak, it's probably going to come from someone else's pipework.
Yeah.
If you've got a big insurance claim, it's probably not going to come from inside your flat. It's more likely to come from the building moving, it could be anything. Someone reverses their car into the corner of the building. It could be absolutely anything. But ultimately, your main risk factor is the building itself rather than your unit. So again, it depends on age of property, really. If it's freehold as a purchase, if you're buying an older period property that you think is just a nice family home, again, if it's got older, more bespoke features that are going to be more maintenance prone, the property is going to be more maintenance prone, or you're planning a lot of works, then go for the level 3, go for Andy's deluxe service, because ultimately that's going to provide you with the greatest level of detail and the most information on the property, and also provide you with costs to rectify issues. So, right, there's these issues, there's those issues, that here is quantifiable costs obtained from local contractors to say that's what it's going to cost to fix. And it again allows you to go in with your eyes open. But if it's a property built by, I don't know, Barclay, Carla around here in the last 5 years, 9.5 times out of 10, a level 2 survey would definitely be the right advice. But again, just to maintain as informed as you can, because in fact, I spoke to somebody earlier today. I won't name the developer, but buying a 5-bedroom detached house in Wokingham. They're buying it cash. It's going to be an investment property. They're just going to rent it out. And it's all been signed off by the developer, building control, the warranty, 10-year warranty, all the rest of it. So as far as everybody's concerned, it ticks all the boxes. That's fine. But the garden patio and just general garden level has been built up above the damp-proof course. So water's just going to come straight into the back of the property. The property's 4 years old. But as far as the paperwork's concerned, there's a 10-year warranty on it. They've signed it off. Building control have signed it off. The developer signed it off.
I presume that landscaping was done after the...
No, it's been confirmed.
I feel like I'm in a police interview for the benefit of the cameras. Luke is shaking his head.
No. No, apparently not. Apparently confirmed through solicitors that it was done as part of a sale. But this is the thing: is building control visit 2-3 times during construction. They get sent a few photos taken on an iPhone. There's human error. People are going to miss stuff. But like the client said to me, I'm not really fussed whether it's been signed off by this person, that person, or the other person. I just want to know whether it's going to cause me an issue, because if it is, it's going to cost me money.
Yeah.
And I want to protect my investment. So I want to do the due diligence.
Not have to make claims against insurance companies, whether that be the NHBC, Zurich, whatever.
Yeah.
It is a hassle that you'd rather, even if you are covered, you'd rather it didn't happen in the first place.
Yeah.
And make sure you purchase right.
Yeah, I think it comes down to in short, just knowing what you're buying. And like any due diligence, if you think you're buying X, make sure it's X and not Y, because that's when you become unhappy as an investor, unhappy with the investment, and you potentially decide you don't want to do it anymore. And a lot of investors that are no longer in the market or looking to get out of the market is generally people that haven't been given the right advice on the way in.
You tend to leave because you're pushed by something, right?
Yeah.
And most people don't receive the right advice on the way through. And I think that's a shame sometimes, that people don't get. There's too much focus on getting the investor to buy the property and not ensuring they actually understand what being a land. And obviously, you get accidental landlords, completely different. But if somebody's entering the market to be an investor, have buy-to-let, it's only really common courtesy that you at least let them know what they're getting themselves in for. I mean, you wouldn't let the transaction go through and be like, oh, let's not tell them that there's a service charge they've got to pay. Do you know what I mean? It's just do your own due diligence. Just give your client or the person purchasing, just give them the advice to just say, go and do your own due diligence. I don't know anything about the building. I'm assuming the building's absolutely fine. Your solicitor can speak to their solicitor regarding sinking fund management, all the rest of it. But you need to be comfortable that what you think you're buying is what you're buying, and that there isn't a bill waiting for you in 6, 9, 12 months' time.
Yeah, I think that's is going back to your points about the talking to your surveyor and talking to your solicitor is getting people who are good at communicating, because if your surveyor tells you there's upcoming costs on a leasehold building, for example, because they can see the state of the building, that things will need to be done, but your solicitor isn't aware of what the surveyor said and why they've said it and what the oncoming question is has that money been set aside, or will I be billed for it the minute I take the keys? Will there be a massive bill landing on my doorstep 6 months later? Where are we standing on it? Because it's all very well if something's been pre-planned and everyone's aware of it and you know what's coming down the line, that's fine. It's when you get a bitter taste in your mouth is when, well, I had a survey and the guy said this, but then my solicitor didn't tell me there was no money in the pot for it. So partly that's your responsibility, but partly you are paying a solicitor and a surveyor to do your diligence for you because you're not qualified to do that diligence. You know, I wouldn't dare tell a car mechanic how to fix my car.
No.
It wouldn't work very well.
No, it wouldn't.
If it took my advice. or my IT guy who looks after all our computers.
Yeah.
You know, it's not my place to tell him. It's the same. It's the place of the surveyor and the solicitor to make that advice. But communication between those two is really, really vital to make sure that they're covering both ends of something and not assuming that the advice is being given by the other.
Yeah, definitely. And obviously we actually physically see the property. So that's the difference.
That always blows my mind about conveyancers. It's never stopped bugging me. I've had questions from conveyancers based on the photo on Rightmove saying, I've got to exchange once, and they've said, but what about those solar panels? There are no solar panels. There's solar panels. There's no solar panels. I'm telling you, I've been there. There's no solar panels. I can see them on the roof. That's next door.
Oh, gosh.
But that is the big thing, is if you take conveyancing, changes to the property, for example, and has it been signed off by building control, or has there been any material change to the property? Is there anything that is going to need to have established use or anything like that?
Yeah, absolutely no idea unless the sellers admitted it.
Unless the seller admits it, or even knows about it, because it might have been there when they got there.
True.
And no one's checked it for the last 2 transactions. Or the buyer's particularly astute or has a construction background and goes, hang on a minute, this doesn't look right.
Yeah.
I've checked the old floor plans on the local authority's planning system, and that doesn't seem to match with what's here. That's the other thing that as surveyors we do and is included within the reports and has that benefit in communicating it back to the purchaser and the solicitor is reviewing the property against any planning history and any building control sign-off that either should have happened, hasn't happened, or has happened, and reporting that within the report to say planning history, building control history, approved, not submitted, concern, follow up with solicitor. That's the other thing is your solicitor is only as good as the information that you provide them with.
Yeah.
Because they don't see the house.
Yeah.
We do.
And
so
they
we
wouldn't
can
have the first idea if a house 100 miles from them has had the kitchen knocked into the dining room.
No.
Whereas the estate agent and the surveyor generally will. The estate agent, from prior knowledge of being in 20 houses the same as it, and the surveyor from the knowledge of, we had Ollie on, didn't we? 7 years worth of qualifications and years worth of on the job experience to know, well, that's not original.
Yeah.
And what do we need to check, and has it been done properly?
I think that's probably fundamentally the synopsis of why to get a surveyor through the door for your benefit when investing is ultimately the surveyor as a purchaser is the only professional directly employed by you for your benefit that's actually going to see the house.
Investing, we've just hit a record high for the FTSE 100 today. Obviously, deep in recession, that the UK is. Deep in recession.
It's all going off in
highest
recession.
Point in all time. Now, that's curtailed by the pound is at the lowest point in 5 months against the dollar. So, as a property investor, someone who works within the housing market, when the pound is cheap against the dollar, for me, that means a lot of foreign money comes into the UK because it becomes cheaper to buy.
More attractive, yeah.
House prices have dropped a little bit, currency's got a bit cheaper, so you've got a double win if you're from Hong Kong or any of the other markets.
Anyway, it doesn't have a pound.
Other currencies are also not great, but
other currencies are available.
You've worked in, as well as the surveying industry, you've worked in the investment markets, you've worked with overseas investors in Singapore. What's your feelings about investing in property in the UK, given I've just given you a massiving tailored lead up into it?
So basically, I think, Mike, there's going to be a lot of foreign money coming in. The thing is, normally there would be more foreign money, and London, certainly the transaction volume in London's definitely been going up over the last couple of months without question. But there's just so many options out there for people now with foreign money, and they either wanted to stick it into something that's unbelievably secure and returns quite well, or they'll just look for other options. Like you said, there's a lot of currencies and economies, and everyone's kind of within 6 months of each other in which direction they're heading in, but everyone's following a reasonably similar trajectory, and people are just looking for best value. When you're at that end of the market, you know what safe investments are, and whether it's in Malaysia or whether it's in London, it doesn't really make a huge amount of difference to you. I mean, a lot of them are looking at, and have been for a while, student blocks, build to rent, those staple investments that they know are going to be here. As you will have spoken about countless times, rents are only going in one direction, demand's only going in one direction. So where is either high net worth UK-based investment or overseas investment coming into the UK going to be? It's going to be into the ownership behind the rental market. I can't really see a safer bet, to be honest with you. And obviously, if they're driving it, then they'll take a while to buy it, build it, rent it. But in the meantime, there's still a massive stock shortage. So, I mean, I just don't see any real downside with, if you're happy with the position you're getting into your investment property today, it's only going to increase on its net yield. It's not going to get worse.
No, I think if you look at the foreign money coming in, we're talking about why would those people want to invest in property in the UK and is now the right time, then you'd say yes, because house prices are down.
Yeah.
Currency's down. With the overseas investors, it's longevity for them. We know at some point, whether that be in the next 2 years, 3 years, 4 years, 5 years, that UK house prices will go up. Right, that's always been the case. At some point
in the cyclical events of the world,
if
they will have an exit where they can make money.
Yeah, if you look at the trajectory over the last 10, 15 years, is that you'll see house prices that have gone like that, come down, gone right up again, and we're talking high levels of going up.
Yeah, then plateau,
then coming down again, then high levels of going up. So that is going to happen again at some point. That's what the data tells you. So for overseas money,
there's a level of part of that which house prices don't have as much relevance to the overseas investor. The currency market does, the economy does.
Yeah,
because if I'm buying at $1.23 to the pound, and the dollar bounces back to 150, well, I've just made 20%.
Yeah,
before the housing market even has any kind of relevance. Now, I'm not saying the dollar is going to go back to 150. If it does, I'll book a holiday.
That is a Mike prediction.
Not a prediction. I would say that's nothing about Forex.
If you want any more abuse online, go 151 as a prediction.
If you're a Forex trader, we'd love to have you in the
that'd be good.
Yeah, it would be.
But it's another point. Foreign investors don't look so. I don't think you can tell me if I'm wrong. There's other things at play than just house prices when they're buying property in the UK. Political safety for one.
They just, generally speaking, base everything on, I suppose, like any long-term investor, they just base everything on a long-term rate of return, IRR normally, and they'll just say, we want to make that. And we don't care whether it's capital, rent, movements in markets where our book value goes up and down in our operating country. We don't really mind. We just want to make that every single year based on all of these variables. I don't care where it comes from, how it happens. That's just the rate we want to make. Over 10 years, we want to make 18, 20% rate of return, which is strong, but they just sit and wait for it, or they create it, which is what they often do. I mean, COVID being a great example, they just bought a load of depressed assets and said, student accommodation will not die because of COVID. So as everyone's selling them off at 30, 40% less than they were 4 months ago, we're just going to buy them. We'll buy them unencumbered. We'll wait until students come back, and then we'll refinance them and take all of our money back out again.
Yeah.
And it's very opportunistic though, isn't it? And that comes back to the currency play, is when there is the opportunity, they've got first mover advantage because they can just flick the button and say, okay, right, let's lock in these 3 acquisitions today. They've already done their due diligence. They know everything about the areas. They've got everything they need operationally there to just go, bang, buy it. So they just take first mover advantage on any small fractional gain, really, because when it's a fractional gain on a huge number, it's still a lot of money.
Still a lot, yeah, absolutely, yeah. The percentages might be smaller, but the pound signs are massive. So it's interesting to hear from that perspective how other people work that wouldn't get considered within the UK market. The other part of we like looking at the news, don't we?
Yeah,
between
love
the two
it.
of us.
You love. You must have so many.
London's biggest estate agent seems to be punting itself around every single internal estate agency publication at the moment. Andy, you're quite well linked with London's biggest estate agents.
Yeah,
in 1 or 2 different ways. is that any way connected to the housing market that Foxton's shareholders are doing seemingly everything they can media-wise to get the company sold?
I mean, it's hard to tell, because when you've got big estate agencies like that, and don't forget, Foxton's were £1.1 billion, 8 years ago, 9 years ago. Now we're seeing figures of £300 million being talked about to buy them.
Yeah.
But I think if you look at Foxton's model, and this could just be a shareholder that's throwing his toes in the water, having a say, so he gets the spotlight on him, and there's nothing really into it. But if you look at the way that Foxton's are operating, 70% of their business comes from lettings. Okay, and the majority of that is in sort of London, where they are. And if you see what they've done over the previous months, years, they've really pushed that side of the business compared to sales. And I think the reason why they've done that is because obviously the lettings portfolio gives the business the value.
Yeah.
But I think that they've got a lot of connections to overseas investors, developers, all of that sort of stuff. And there's more build to rent now going into London. So they're involved with all of that side of things. So I think that's got a big part to play in on why that headline's come in with that lettings side of the portfolio.
I'm interested whether there's a conspiracy theory in this. FTSE's hit, as I said, the highest point ever, and then there's a few in the sort of housing sort of PLC world which are now maybe going, now's a great time.
This looks like a lot of money. Let me take it.
Yeah, absolutely. Yeah, because it is likely a company that kind of size is going to get bought by venture capital companies, investment companies, overseas companies where, hey ho, pound's cheap.
Yeah.
So you can maximise your value and get out.
It's that fractional gains, isn't it?
Yeah, absolutely.
On big scales.
Yeah.
We'll have to see, because they're in a position where they don't need to sell.
Nope.
Right.
Nope.
They've got they've done remarkably well over the past 12 months. Their projections look okay. They're not in that position where they think, oh, we need to sell. We're in trouble. We're in all of this. It's a debt-free company. So they're in a position they need to sell. But we've seen other external investment come into rivals of theirs. American companies seem to be the ones that cough up the money at the moment. The American companies, they love it.
Buy everything.
So yeah, we've
doing an exchange rate.
But yeah, so we'll have to see. But like I said, it's acquisitions, isn't it? Overseas money coming in, seeing something like the Foxton setup. If they were able to purchase it for 300 million, 350, 400 million, whatever it is, and it was valued at 1.1 billion 8 years ago. I mean, the potential's there, isn't it? Their external money could come in. They could buy other companies with that external investment, and they can become London's leading estate agent again. But yeah, we'll have to see. But I like your thoughts on a conspiracy, Mike.
I'm here for it.
That's what's going to shoot up the comments on social media. Conspiracy, check it out.
Full hats out. Mike's back talking conspiracies. Anyway, gents, thanks again for this week's episode. It's been a really insightful one, particularly I think for those who are looking at leasehold investments. Some tips that I don't think have been given or considered before on the podcast. So Luke, thanks for joining us. Andy, thanks for joining us, and we'll see and hear from you again next week.